Welcome back to Wall Street Confidential, discussing General Mills. Jim Cramer recently added some shares to his ActionAlertsPlus.com portfolio, and you actually just interviewed the CEO as well.
Right. I mean, the main reason why you would buy a stock like General Mills or a stock like Pepsi or a stock like Procter, all of which I own, is that the economy is not recovering. And I agree with that. The economy won't recover till next year. I've been saying that. The economy will recover with housing. And I believe that 2009 is the year that housing bottoms. And that's because of tremendous price declines. General Mills has two things going for it. One is that the sector is the right sector for a sluggish economy that is not picking up. You want the stuff from the supermarket, and the stocks are reacting that way. But second, General Mills has put through a series of price increases at the same exact time that the raw costs have gone down. So you have this tremendous possibility for margin expansion. Given the fact that the stock sells at 17 times earnings and the earnings estimates are too low, I think it's entirely possible that you could see a radical revision in the multiple when they start reporting these good numbers with the gross margins increasing. Also, General Mills has not been an international company, unlike Kellogg, but Ken Powell, as the CEO, is determined to grow India, to grow Russia, and to grow China. Obviously, everyone knows their brand names. And remember, this is a big commodity buyer, and the commodities have been under just tremendous pressure since even the quarter ended for the previous quarter, which they still pre-announced the upside. So, I mean, I think Ken Powell's a great manager. I think they're executing well. I interviewed them last week. I had to wait 5 days to buy. But when I look at General Mills, I think it's never going to really come down other than intraday S&P kind of sell-offs where you'll get like a dramatic decline, say, because Fannie collapses. And then you just got to be there and buy General Mills. One of the things that people have to recognize, I always say there's a bull market somewhere, the collapse in Fannie and Freddie is so bullish for the steady growers as people recognize, well, wait a second, I don't want credit risk. Who doesn't have credit risk? Food companies. Credit risk is going to be radically revalued with the collapse of Fannie and Freddie, even more than it has. And anybody who has credit risk in AIG or Lehman Brothers is just going to be shunned, and it's not stopping here.
The staples are here to stay. Organic,
yes,
on the other hand, going away. A lot of
people, General Mills is not. It was interesting because Ken Powell's not pushing. Yeah. He did not push his organic offerings. People are cutting back, and they're health conscious. They're health conscious, but price conscious, and that's Pepsi and that's General Mills.
Okay, thanks so much, Jim Cramer. Check out that note on ActionAlertsPlus.com. This is Wall Street Confidential. Stay tuned.